Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down to bite-sized pieces. Today, got some interesting stuff. First up, we're going to take a look at what is happening in the traditional market and how that is potentially going to spill over into the cryptocurrency and digital asset market. Plus, we have to take a look at what is happening in the futures market because things are just exploding over there, and there's some good things and there are some bad things that I see on the horizon. Also, this investment trust just reached 3.7 billion assets under management, and that is a sharp rise from their original 2.2 billion, which just happened a couple of months ago. So let's dive right in. But first up, let's take a look at what's going on with the market. So as we all know, the halving just happened yesterday. What an event that was, right? Pretty anticlimactic, not too big. There was just a little bit of a bump here, but mostly what we saw was a sharp decline. So what the heck happened? Well, a lot of things happened. People got wrecked. People were leverage trading. People were not knowing what the heck was really going on and what they were doing. They became overly optimistic and it crashed hard. And this is the time when you want to start to potentially think about buying things because things are at on a sale, and they are much lower than what you would buy originally. Now, like I talked about yesterday, if you were just coming in the market, this is a prime opportunity to invest. I can only tell you what I'm doing. I'm just dollar cost averaging. Every week I put a little bit of money into my portfolio, which includes these. Yeah, I invest into Bitcoin, Ethereum, XRP, Chainlink, Cardano, EOS, and finally Tezos. So I don't put any more money into XRP right now. I have my position full. I'm just pretty much waiting. But the other ones I put in, between $25 and $50 every single week. And I just dollar cost average. It's not very exciting, but it tends to work out. And I'm not subject to the highs and the lows, and it just kind of works out over time. And there's a phrase that talks about it's better to have time in than timing. So if you're trying to time the market, you'll never time the market. No one does that. No one is Nostradamus out there. So that's just what I do, and it seems to work out okay. Anyhow, let's break into today's stories. So first up, I always like to listen to this guy. This is Mohamed El-Erian. He's the Allianz chief economist, and he's got some pretty good insight as far as what the economy is doing, what Main Street is doing, and what Wall Street is doing. And I like to listen to him because it gives me a greater insight as to what I can expect to happen as everything flows over into the cryptocurrency digital asset market, because it's all pretty much interrelated now. We've got a lot of the traditional investors that are coming over to cryptocurrency. And what they're doing over there plays a significant role of what's happening right now. We do not just have a bunch of retail investors. We have institutional investors and hedge fund managers actively investing into the space. So it's important to know what's going on everywhere as much as possible. But before we start, I wanted to make a mention here. And it's this little title right here. It says NASDAQ up 1.7% for 2020. Like, that is some great thing. Like, that is just something that's just so awesome. I just don't get it. What they should be doing is talking about like Bitcoin. Like, hey, you know how good Bitcoin's doing? Well, year-to-date performance, 27.4%. Gold is up 13, NASDAQ 3.2, Euro, S&P, oil. They're all down just a little bit. And so why don't people talk more about that? And that's just 2020. And then if you want to take a look at 12 months back, here's a nice little graph which takes a look at how Bitcoin is doing over the last 12 months. It's up 41%. Gold, it's way above gold, it's way above stocks, way above S&P, oil, all that stuff. And even if we look back to 2019, you can take a look at it dominated all the asset classes, looking at Bitcoin, oil, tech stocks, U.S. real estate, global real estate, natural resources, bonds, and gold, and all the rest of that stuff. Now, just to make mention, this was data as of 3 May 2019, so it was halfway through. But every single year over year, Bitcoin is dominated. And it's not just Bitcoin. You have to remember that, Ethereum, since its inception, has gone up thousands of percent. XRP is the same way. Chainlink, Cardano, EOS, all of them. I mean, from their inception to what they are at now, they have appreciated greatly. So when they sit here and they talk about, hey, guess what? NASDAQ's up 1.7%. Who cares? It just makes me kind of frustrated that they don't talk about our space more, because in all honesty, they should. And I believe in the next 12 to 18 months, they're going to. Anyhow, let's get to this first part here. So let's listen to Mohammed as he talks about how markets are divorced from reality, and this is the reason why.
The key issue is that we are reopening. We are reopening in a bumpy manner, and we've just got to keep focused. But markets are completely divorced from this reality because markets have stumbled into a win-win. You win if the reopening goes well, and you still win if it doesn't go well because the Federal Reserve is in there in a big way. And I think that's why markets are in one universe and the real economy is in the other. And the real economy is going to get a lot worse. We already have two officials telling us that the unemployment rate is going to go north of 20%, and it is, unfortunately.
So there you go. That's the reason. It's all bailouts. It's all bailouts and the Fed and the Treasury and everything working together for them just to go, hey, look, don't worry about it. We're just going to print money like crazy and it's going to be okay. So here's my question, everybody, and especially for you right now listening to this video. Do you think that the economy might actually at some point spill over into the traditional market, the market at some point, because things will get so bad? And how do you think that will affect our cryptocurrency market? Will traditional players rush to the next big thing, or will they only come in to manipulate the market? So to paraphrase, the market itself, you've got Main Street and you got Wall Street. You have the economy, which is the real world, and then you have the market, the S&P 500, the Dow, the NASDAQ, all those places. Do you think at some point it'll just spill over because things are just going to be so bad? That's the big question. So let me know what you think and put that in the comments section. But let's move on to the next part here. And what he's talking about in this next section here is he's saying, so how far can the Federal Reserve go? Are there any limits to as much as they can print? And I just want you to remember one thing, and that is that the Federal Reserve, and some don't know, some do, the Federal Reserve is about as Federal as Federal Express shipping. There's nothing federal about Federal Express. There's nothing federal about the Federal Reserve. They just have federal in their title. They're just a bunch of central bankers. Now, the Treasury Department, that is part of the government. So when he says the Fed versus the government, you know why. It's just a bunch of bankers. That's all it is. So let's take a listen and see what he has to say about that.
And look back at what happened after the Great Depression when prices collapsed, but then the market came back for quite a while, I think till around 1937, until the government backed off a little bit. And that's when things got dangerous. So the Fed is saying now that it will do anything and everything, and there are no limitations. But are there limits?
So there's no limitations from the Fed's point of view if they have the Treasury on board. The Fed has the balance sheet, and if it has the willingness, it can go. And the difference between the Fed and the government is that the Fed can go straight to the markets, whereas the government's ability to get to the end user is much more complicated. The issues for the Fed is the collateral damage. They've become more and more of a quasi-fiscal agency, which exposes them to political risk. They have reputational risk if they buy things that go bankrupt, and we've heard bankruptcies are going to go up. So the Fed has to balance what it can do with what it should do. And I think that's where the judgment calls come in. A lot of us were surprised, not that it went in to buy Fallen Angel, investment grade names that became high yield. That makes sense. But it went in, it said it's willing to buy the index. And that's quite an aggressive move. And that has given the market a lot of confidence that the Fed backstop is solid.
So yeah, the Fed's what he's saying is essentially the Fed's is coming in and going, look, do whatever you want to, screw up as much as you can, and we'll just help you out and we'll just buy everything. Because we're going to buy the index, we're going to buy bonds, we're going to buy everything. No big deal. No harm, no foul. So that's why I asked that question. Like, do you believe that we can just do this forever? We can print money forever? We can just keep going? There's no ceiling? Because from what you're hearing from this economist, from Mohammed here, is that not a big deal. And not only him, but I was listening to another video. This is Paul Krugman. He's the Nobel Prize winner for economics in 2008, and he says the exact same thing. I'm not going to play it. I'm going to probably play this tomorrow because we're going to go deep into this one. But he's just saying, look, there's no ceiling. They can do whatever they want. And he talks about Japan, how Japan has 200% debt to their GDP, and they have no problems. And then he gives more examples. So to me, I'm like, I always thought that we could, once we print too much money, it leads to hyperinflation. But these two economists are like, nope, no big deal. Just keep going. Just keep happening. So I am at a loss for words. Let me know in the comment section what you think, but let's move on to the very last section here. And when I heard this is only it's like 50 seconds long. But when I heard what he was saying here, it made total sense about the Fed bailing out companies and not bailing out people and trickle down and all these types of things. And, I just can't believe it happens like this. So let's take a listen.
2 months into this crisis, and already we're hearing Main Street versus Wall Street because the decoupling has been so big. Company versus people. Why are we saving companies when they're not keeping people? We have record unemployment coming up. We have record layoffs. So you see, rich versus poor. If you look at the employment report, it is the minorities and the young that got hit much harder than the others. So we're already having that political debate, and it's only been 2 months into this crisis. So yes, it has an important political angle. But I think up to the summer, well into the summer, we will get a third package, and I think you'll see both the Treasury and the Fed doing whatever it takes. The question mark is how far is the market front running that? Remember, they haven't bought a single bond yet in high yield space or investment grade space, but the market has priced it all in.
So a couple of things there. First of all, he talks about, tell me if you agree with what he just said, that they have been bailing out big companies and not the small guy. That's the first thing. The second thing is that this second stimulus package that's going to come down the pipe, or a third or whatever it is now on their number, do you believe that it's going to be able to bypass these larger companies and go to where it's supposed to be? Because I got to tell you right now, I have multiple companies and they're all small businesses. They're all in their own little section. They're all their own LLCs. And so far, as of today, May 12th, 2020, I have received 0 bupkis because there's bigger companies out there that are sucking up all the different funds and they ran out of funds. So, I mean, I'm fine. It's not like I need this money right now. I have a very low overhead, but it's one of those things where it's like, I don't trust you. I don't trust you that it's going to bypass and it's get to the people that actually need it. I think you're bailing out the big guy and you're letting the little guy suffer, and that's just how it is. And then the third thing is what he talked about. He said the Fed has not bought any bonds. And this is another article that I just read. This is from MarketWatch, and the buzz is the Federal Reserve will start buying corporate bond exchange traded funds on Tuesday, which will be mañana. And what they're doing is they're going to buy junk bonds, and they're just going to say, hey, look, no big deal. If you screwed up on this and you bought a junk bond, no big deal. We're going to buy it frac from you. So again, this is another example of where the traditional market is just kind of doing whatever they want to do. And maybe, I don't know, this is where I lean into the wisdom of the crowd. This is why I ask you, what do you think's going to happen? Will this spill over? Can this actually last? Do you think that it won't spill into the actual traditional market or into cryptocurrency digital asset? That's the big question. Let's move on. So next up, we've seen some actual positive things in the traditional market. S&P 500 is actually up, I believe. 5 days, 1 month. Yeah, seems to be doing pretty well for whatever reason. And then also the Russell 2000 Index, which is a smaller group, 5 days, 1 month, 6 months, up. So we can see like in the traditional market, it's going pretty well. And this is, it looks like it's carrying over into the futures market. Now there's 2 different articles. One is about backed Bitcoin futures and then Bitcoin option trades high post halving. So let's take a look real quick. So what's interesting about this article is it starts to talk about the actual, how it's realistic. And we weren't so high off the halving. And that's what happened, I think, the last 2 weeks. People were saying, they heard about the halving. They didn't really know what it was, but they know that, okay, when this Bitcoin halving happens, then all of a sudden the price will go up. So I should get in this now. And then once they got into it, like, oh, wait, hold on, what? It doesn't go up immediately? It doesn't, 10x in a day? Oh, shoot. And seriously, I think that's what a lot of people thought. They thought like in a month they were going to be millionaires or something. Not everybody, but some people definitely did. So anyhow, it talks about before the halving, there was a 15% dip. I believe it was more than that because I saw prices at 10,300, and then the next couple of days it was like 8,100. So I think that was quite, was that 20% or so? I could be off. Let me know in the comment section how bad my math is. Anyhow, and then they had a little report here from Skew, according to data from Skew Analytics. The most traded contract on Bitcoin options depicted a bearish trend, and I think this is what we're going to try to look at. We know that over time, the cryptocurrency digital asset market will go up. We know Bitcoin will go up. But the short term, right now, I believe that we're going to see more hard times ahead. I don't think we're going to go, definitely not parabolic. I don't think we're going to go up. I think we're going to start to crash down to reality and then slowly build from here. That's the whole point of the last cycle. After 2016, after the halving, we had a huge bull run up to 2017, and then it crashed again. And that was good because it started to lay the track. It started to actually build out the infrastructure. It got away from all the nonsense, all the white papers and the ICOs that were just worthless, and we're left with things that actually solve a real problem. So I think this is a good time. Look, this is a great, if I could go back and take all the money that I invested in 2017 and put it right now, I would definitely do it. But that's just me. Anyhow, the contract with the 696 Bitcoin in volume was traded with a strike price of 7,500 put with expiration 29th May. The third most traded contract was also 8,000 put, but the expiration was 15th May with a strike of 8,000. A total of 947 Bitcoin and option contracts were currently marked along with the expectation of a price crash. So right now we are at roughly 9,000, around 88.79. We can refresh real quick and take a look at it. So yeah, let's just deal with round numbers. I like round numbers. So about 9,000. And they're saying now it's going to be 8,000, going to be 7,500. And sure, I can see that. Totally makes sense. So this is just one example of what is going on with the futures. Let's take a look at our contracts. Take a look at the futures market as far as backed and their all-time high in CME. So scrolling down, volumes for BAC's physically settled Bitcoin futures touch 42 million. I remember in one of my other videos I said it's physically settled, and someone corrected me and said, you can't really physically settle Bitcoin. Thank you for that. I appreciate it. So yeah, you can't physically touch Bitcoin. So just so you know, they're in cold storage on a hardware wallet. Just so you know. All right. Anyhow, while that of cash settled soared all the way to 9.8 million. So physically settled Bitcoin futures touched 42 million. That's good. And cash settled was 9.8 million, and this was on backed. So we had gone over another video a couple days ago where we looked at 2016, and it was Trace Mayer was talking about how Bitcoin could potentially get in the futures market at that point. And he warned everybody. He said, if they do that, there's a high chance of manipulation. And the way they do it is through cash settlement. They can do a lot of things. But when you physically settle it, like in cold storage, have to move it, you can't monkey around with it too much. And that's why I had big hopes for backed, and it really hasn't panned out, which is a bummer because backed had a lot of problems. Anyhow, so when I see about 42 million at 9.8, I'm like, that's pretty good. It's pretty awesome. But then when we scroll down, I start to hear about CME. This is where I'm like, not that great. So an interesting climb was also seeing the figures of another popular institutional behemoth called the CME. Open interest on the platform has increased nonstop after the crash on 12th of March. That's good. And was up by more than 200% since the beginning of the year. And they have nearly 1 billion Bitcoin futures traded on the platform, and they are cash settled, my friends. Cash settled, not physically settled. So you're looking up here at backed, you're like, oh, that's pretty awesome, and then here's a nice little graph. Backed physically settled, 42 million, somewhere around there in May. And yeah, so you're like, great. When you come here, you're like, damn, CME's got 1 billion. That sucks. So I was kind of bummed out about that, but as I kept scrolling down, good news. The rise in the cash settle volume, both backed and CME, also indicated that investors were gaining exposure to Bitcoin even as they did not physically hold it. And we had just talked about Paul Tudor Jones, who is a Wall Street legend. He's a billionaire. His group, the Tudor Group, they have over 21 billion in assets under management, and he was talking about getting into the futures market for Bitcoin because he believes there is a huge upside to it, and I have to agree with him. So when we hear about these, we're like, great, people are getting exposure to it, people are talking about it, hopefully it brings them into the whole cryptocurrency market, not just Bitcoin, obviously, right? Further on it talks about other cryptocurrency platforms also noted a significant uptick in the volume of Bitcoin futures, traded as the aggregate numbers stood close to 40 billion, with exchanges such as Huobi, OKX, and Binance dominating the chart. And when I saw that, I'm like, this is great news. We've got a lot of people in the futures market. At least it gets them into it. Me personally, I'm not a big trader. I'm not onto futures. I'm not onto derivatives. I'm not onto leverage trading. If you want to do it, good luck. But that's not my thing. But at least it gets people into it. I don't like it when I hear about all these people getting wrecked and losing a ton of money because, whatever happened on the market. But it does happen. And if you want to do that, go right ahead. I just don't think it's a good idea. Anyhow, so this is all positive news. I like that. And the last section we're going to talk about is even bigger. So this was an article from Daily Hodl, and they talked about how this large crypto investment trust reached $3.7 billion in assets under management. And of course, who could it be? Well, it's Grayscale. So Grayscale now manages $3.7 billion AUM. And that's pretty amazing because this is their quarter one report. And their Q1 report, they only had $2.2 billion. This is the first quarter of 2020, mind you, right? So January, February, March. And just so you guys know, majority of investments, 88% came from institutional investors, dominated by hedge funds. The last 12 months was 79% from hedge funds and institutional investors. So when you go from 2.2 billion, January, February, March, and now you're at 3.7 billion, that's quite a jump. So what do you think it is? Tell me in the comment section. Do you think it would follow the same trend of 88% came from investors, institutional investors, and hedge funds? Or do you think it's just retail people getting into it? Let me know what you think in the comment section, but I will tell you this. There is a premium to be on that because Grayscale does everything. They have custody. They do a lot of the background work. So they're paying like 4x of what they would normally pay just to get it on like some kind of spot trading exchange like a Binance or a Coinbase. So to me, it speaks volumes if you have these huge investors going, saying, it's 4 times what the original amount is, but you guys do everything? That's okay, because we know it's going to go up like 10, 20x. No big deal. Keep going, my man. To me, I think that's a bullish thing. So that's it. Listen, that's it for today's video. I want to say thanks for watching. This is a quicker type of video. It's not so much going on, but I thought it was interesting to all bring up. And I want to say thanks for watching. Also, thanks to everybody who has joined up. There's a join button at the very bottom. You just click on that. And it's just like a tip. It's like $1.99 if you want to join up. There's 2 different levels. And I don't hold anything back, but if you want to, put a little bit extra, sure. I'd really appreciate it. And then for the level 2, we've got 3 people now. All right, Soft, my man, who's always on the premieres. I really appreciate it. Myself, Hulse, and a new one, Dave Plummer, the straight talking guy. If you haven't seen his videos, pretty interesting stuff. And he just goes through a bunch of different criteria and things like that. It's pretty interesting. I recommend. All right, so that's it. Thanks for watching, and I'll see you on the next one.